Hello everyone, welcome to Value Invest Asia Facebook Live, our monthly Facebook Live, where every month we'll try to find great investors to talk to on their investment process and understand and learn from them of how they create their portfolio. This month we're very privileged to have a good friend of mine who is the founder of boosterking.com.my, Ian Tai. Ian is the founder of boosterking.com.my, and this is a proprietary tools that he created to help investors to seek out great stock on Bursa Malaysia on how to invest. But Ian is also a very dedicated income investor, so he look for income stocks, and some of his favorite is actually REITs, and in particular S-REITs, which is what we are going to talk to him about today. Two of the S-REITs that he recently have bought, and let's dig his brain and learn why he chose them and what he sees in these two REITs. Right. Before I pass the mic to Ian, I just want to give a shout out to our sponsor for this video, who is helping us make this video possible, which is brokers FSN1. FSN1 is a broker in Singapore, and is what we call a discount brokerage, and they are really one of the cheapest brokerage out there in Singapore today. And definitely they are also disrupting the market where previously brokerage in Singapore are, I would sort of say, overcharging a lot of investors. So definitely, if you are looking to start a new brokerage account, do check them out at FSN1. So let's get back to the show. Hello, Ian, how are you?
Hello, Stanley. How are you?
Very good. Very good. Very good. Thank you for coming to our show. Yeah, I think maybe some of our audience might not be familiar with you yet. Why don't you give a brief background of yourself? How do you get started in investing, and what really is boosterking.com.my?
Okay, thank you so much. First and foremost, it's a privilege to be on your show, and quite excited to be here. And in fact, it's actually my first show with you, so it's
Yeah.
even more.
Sorry it took so long.
All right, so basically, my name is Ian, and born and bred in Malaysia.
Yep.
But mom is from Singapore.
Okay.
So always have an attachment to Singapore, although I have lived the most of my life in Malaysia, but I still go down to Singapore once or twice in a year. So so that's actually a little bit about myself.
Okay.
So how did I get started?
Yeah.
So basically, actually it's from a friend, all right? So a college mate of mine when I was studying A-levels,
Okay.
all right? So I think he was into investing, and I wasn't. So I was just, a normal guy who just graduated from school.
Right.
School means like secondary school. And in Malaysia, what we don't necessarily have O-levels. We have something of equivalent, which is SPM.
Yep.
So after I have actually passed my SPM, the next step is to go into either STPM or A-levels. So I chose A-levels. And after that, I thought that everything should be, just follow the path, go to school, get a good job. Hopefully you get a good job and stuff like that. Never think too much, right?
Yeah.
So that was me when I was like 18 years old, until some friend of mine, some classmate of mine said, Ian, you should read this book. Say Rich Dad Poor Dad.
Okay.
So it all started from him. So all credits to him, all right.
And then after reading the book, why did you decide not to take the traditional path of going and get a job?
Because after that, you kind of like question, say, hey, it looks like there's another way of doing things than just going to school, get good grades, and get a good job and stuff like that. Right. So there's another way, the entrepreneurship way, the investment way to actually to make a better living. So I'm actually contemplating between the two. So, and at the end of the day, the excitement in the world of entrepreneurship, in the world of investing, is more. It's kind of like more exciting than than passing your exams and
Yep.
get a 9 to 5 job. It seems that is the more exciting
Okay.
journey.
Okay.
All right, I ended up with that. So that is actually the seed lah, a seed that has been planted by a friend and which actually grow. All right.
Right.
So
And
but here's a difference between me and my friend at the time.
Mm.
So my friend was into investing. So what he did was he's actually quite gung ho.
Okay.
And so at the young tender age of 18 years old, he actually opened his own stock brokerage.
Really?
18
Okay.
years old.
That's interesting. How does he do that?
I don't know. I have no idea. He just said, Ian, he just tell the whole class. He walked into the class and then he said, Ian, he tell everyone, not just Ian. I said, hey guys, come over here. I got myself a brokerage account.
Okay.
Everyone's, whoa, really? You got a brokerage account? Then he opened up his newspaper. Right? So there's a newspaper, and then he will actually open up to the stock section, right?
Okay.
Then he tell his classmates, including myself, he say, I bought this, I bought that, I bought this, I bought that. Then everyone's like, wow, very impressive.
Okay.
Then after a few months later, we never hear him talk about it again.
So you never probe him, rub his wound a little bit.
Another friend actually, we don't need to rub his wound, because a few months later he will just come back and say, someone will actually ask him, hey, what happened to your stock investment, your venture and stuff like that.
Yep.
Then he will just say, oh man, I lost like 70% of my capital buying all this and that.
Okay. I see.
So from him actually, yes, so that could be the first nugget of wisdom when it comes to investing, which is you don't just open a brokerage account and just buy this and buy that and hope for the best, right?
Yeah. Okay.
So I thought maybe and somewhat at the time I was reading Robert Kiyosaki's book, and he talked a lot about investment education, financial literacy, and people should get educated first before venturing into any kind of investment.
Okay, and then maybe jump a little bit ahead. After you read that book, is there any investment book that you really adheres to that you kind of see as your Bible after that?
There's no one particular book. Of course, after that, I began to explore around. Of course, I read a lot lah. Of course, Robert Kiyosaki has a lot of series, so you actually kind of like read that. Then when it comes to stock investing, I will go with Pat Dorsey's lah. If you know Morningstar, Pat Dorsey. So he has this book called The 5 Rules of Stock Investing.
Okay.
Or something like that.
Yep.
All right. So I actually have that book and I read it.
Okay.
So that is one of the beginning stages of me learning about financial statements and stuff like that.
I see. Okay. Yep.
So now the story continues on from.
I see. Then, so now after a while, like you learn how to invest. So, maybe share with us what is your particular style of investing right now. How do you invest now?
For me, I actually invest primarily for income.
Okay.
Actually, there are two things right now. One is preservation of capital. Means the thing that invests, it must actually reasonably be resilient. All right. Whereby so that my capital is actually can be preserved. The other one is cash flow.
Right.
You can't actually, you read Robert Kiyosaki's book, you can't help it but you will actually expect some form of cash flow from any sort of investment that you get into lah.
Yep. I see. Okay, so you focus a lot on cash flow. I see more and more people joining now. So if you guys are here, say hello to Ian, and if you have any question for him, just comment down below. We do already solicited some question beforehand, and I think we actually have quite a list, close to 50 of them. So if we don't go through all the questions that you have submitted, I'm really sorry about that because of time constraint. But we try to get through some of the more interesting ones.
Oh.
For okay, we want to talk a little bit about our income investing, and especially today we talk about REITs, right?
Yes.
When we select REITs, what are some of the key things that you look at when you're looking at a REIT?
Okay. So here, right, let me just borrow a friend, a framework, all right, that has been the a principle, all right, for investment by some of our good friends, all right, to actually further explain how this thing can actually work for me and as well as for you. So the framework is actually the investment quadrant thing by
Yep.
the fifth person. All right,
Okay.
our
Okay.
good friend, right?
Right.
So I'm gonna just chill up that lah. Chill up me, copy and paste that lah. Right? Actually, very good framework. I mean to say
Okay.
it's actually I believe they also copy it from Warren Buffett. But anyway, they have nice graphic designers to come out with that kind of logo. But anyway,
Okay. Yep.
but kudos to them. But it's a good framework. It's a
Yeah,
very
the framework is timeless anyway. Yeah.
So of course the number one is business, all right.
Okay.
The first quadrant is business. So we always look at when it comes to REIT, then we look at the quality of the properties.
Quality of the properties, right? Okay.
So that's number one. All right. After you have actually looked through the quality of the properties, all right. Oh, by the way, how do you assess the quality of the properties? One of the thing is if the REIT doesn't have a lot of properties, then you can go through the financials of each and every single property.
Okay.
If the REIT has a lot of properties, then you go through the segmental financial results lah.
Right. Okay. And,
So
and what were you looking for if you're looking at them individually?
Individually, I'll look at theirs. Okay, first of all, as a financial guy, you will actually look at the finances.
Okay.
Means to say, the revenue and the net profit, the net property income.
Right,
all right.
property income, yeah.
Okay. So these are the two things which I will look at first. And of course, you want the properties to be occupied by tenants, so therefore you will look at its occupancy rate. Make sure they're above 90% or 95%.
Okay. Wow.
Right?
Above 90%. Okay. Yep.
All right. So that is the benchmark lah. I mean, there are some REITs, some in Malaysia lah, that they don't even have 90% occupancy rate.
Oh, okay.
Not gonna name them, but when
you can name them, no problem. I don't mind.
But if it's a retail REIT, I mean it depends on your country lah. Like me, if I'm familiar with Malaysia, then you go to some Malaysian shopping malls. All right, the biggest thing will do.
So you will actually check them out physically, right?
Yes.
Okay. Cool.
That would be the thing. That's the beauty of REITs, because you get to actually go to shopping malls to actually check out the property itself.
Yeah.
Actually, that actually initially sparked my interest in S-REIT.
Okay.
All right, because I find that Singapore is a different country lah. It's like every shopping mall seems to be connected to an MRT lah. It's not like Malaysia, you have to drive from one shopping mall to the next lah. But Singapore is amazing lah. Everywhere is quite.
It's connected.
Every shopping mall is connected to an MRT lah. So that makes it very interesting.
Okay. So you can just spend whole day and just roaming around one shopping mall after another.
Of course, you can do that as a field work, but actually the research work is just more about being observant, right? So when you have an investment mindset, actually even like Stanley, are most of the listeners actually, do they come from Singapore?
So our audience, I think, mostly 50-50. So half of them in Singapore, but half in Malaysia. But we always say that investing shouldn't be restricted geographically, because it's the asset class that's most easy to diversify, right? So anyone can invest anywhere, and that's really what we are advocating for, right?
So basically for me it's like this lah. You don't need to purposely go and do certain kind of research. It's more like let's say for example let's say I'm thirsty. One day in Singapore I'm very thirsty, and then I just want to get a canned drink. Then I walk around Singapore and I found myself a grocery store, all right, where the name is actually Sheng Siong, all right.
Okay.
All right, then little do you have passed through that kind of store like don't know how many thousand, how many like 100 times already, just to get just to get some simple supplies and stuff like that.
Yep.
Little do many people know that it's actually a public listed company.
Yeah, yeah.
And it's actually doing quite well. So all it takes is a bit of observation lah.
Okay. So you really find your stocks from your personal experience a lot, and just by observing, going to a mall, seeing how things are doing, right?
Yes.
Yeah. Okay. Cool. Okay. We have also quite a popular question that I think quite a few number of people ask, including Wei Hao. I hope I pronounced your name correctly. So he's basically asking, what do you think about interest rate? When people are talking about interest rate increasing, and many brokers are giving out report like interest rate increase means that it will hit the REITs. Is that a worry for you? Is that even something that you look at?
That one is actually quite interesting. All right. So technically speaking, interest rates are all right. So we have to jump queue a little bit.
Okay.
Okay. Some REITs, right, where we have to look at their debt. All right. So debt. So some of their total debt, they are based on fixed rate. Means to say, it doesn't matter how your interest rate can go up or come down. Right? If it's based on a fixed rate, it's a fixed interest rate. Right? Some is based on the floating rate. So in that case, their interest cost may actually go up if the interest rate actually goes up.
Okay.
So basically, for me to cap that, I think some REITs lah. Actually, some of the better REITs, they usually have a high proportion of debt, which is based on a fixed rate over a floating rate.
Okay.
So that's my way of looking at things lah. So
okay.
If you buy REITs like that, then maybe you have a much better night sleeping lah.
Okay. Yeah, a way to, I guess, cushion your risk is just let the REIT manager find a REIT manager that's good at finding a good financial source and cost to manage their own costs. So we pass the risk down to them and make sure they do a good job.
Yes.
Okay. Yeah, I think let's dive right into the two stock that you recently told me about, and it's quite an interesting pick, I would say. I'll just name the REITs first lah. Right? You told me that you have recently invested in this S-REIT called Mapletree North Asia Commercial Trust, and another one is Fraser Logistic Industrial Trust. I look at both, and both are mainly invested in property outside of Singapore, right? And at relatively high yield. Mapletree North Asia has about 6.7% yield, and Fraser Logistic giving us more than 7% yield. Let's start with the Mapletree North Asia Commercial Trust. Why of all the REIT you narrow down to this?
Okay, basically, to me, I have a preference when it comes to sponsor. To me, sponsors are actually very important when it comes to a REIT investment, all right? Because a sponsor, right, like Mapletree, all right, they have a lot of development projects, all kinds of development projects, and if they are very efficient when it comes to developing properties, good quality ones, and they are very good in investment, and they are very good in capital management, which is either REITs management or private fund management. All right. So if they have development pipeline, if they have a pipeline of developments, all right, that means for all the REITs, whether it's Mapletree North Asia or Mapletree Logistics. Actually, I have logistics as well. All right.
Okay.
So for your information, Mapletree Commercial and as well as Mapletree Industrial. So for all these four REITs, right, it depends on the pipeline, and of course there is room for growth because there are a huge pipeline. So actually, I like all Mapletrees. If I got enough money, I'll probably buy them if the price to be.
Okay, but so far you own mainly Mapletree North Asia and Mapletree Logistic.
But why recently logistics is because I bought it at a really, really dirt cheap price.
Okay.
All right, now it doesn't drop back to my dream price lah, which is $1 lah.
Okay.
$1.
Okay. Okay. That's
But let's
okay.
get to the North Asia Trust.
Mm-hmm.
So what got me is that initially I didn't buy it because I thought, North Asia Trust North Asia was used to be called Greater China
Yes.
Commercial Trust.
Greater China. Yes.
All right. So at the time, I just know that the trust has three properties. One is Festival Walk,
Yep.
which is Yao Yat Seng in Hong Kong,
Hong Kong. Yep.
and the other one is actually Sandhill Plaza, and the other one is Gateway Plaza, if I'm not mistaken, lah.
Okay.
Right. So there are only three properties. So at that time, they don't really. It doesn't seem like it's growing much. It doesn't seem the three properties are doing okay,
Mm-hmm.
especially Yao Yat Seng, which is Festival Walk, but it's a lot of room for growth until this year, maybe around April or June, somewhere in the middle stages of this year, they changed their investment mandate. All right.
Okay.
They changed their investment mandate. They say, okay, we're going to expand geographically. We are not just going to invest in China properties or Hong Kong properties, but we are going out to Japan. So now
Yep.
they have North Asia. And from it, they actually bought like 6 freehold properties in Japan.
Right. Okay.
So now, like, hey, game on, man. All right. Now you have a growth story.
Okay.
Because I think REITs, right? Some REITs are very good. It's just that they don't have a growth story. But I like those with what do you call growth
Potential inside. Okay.
Yes, because a lot of people say, if Ian, you invest for dividend, where got growth? But for me, you want to invest in a REIT that not only pays you good dividends now, but growing dividends in the
future. Right. Yeah. Okay. Yeah.
So the Japan thing is actually a growth story by itself. So that got me interested, and it's all freehold. So I began to actually dig further. So that is the first reason that sparked my interest on the REITs. But I didn't buy immediately.
Okay. And then what else do you research on?
Of course, once you have done all the fundamental analysis,
fly to Hong Kong and see the property.
Sorry?
You fly to Hong Kong and see the property?
No lah. If I got money to buy the flight, I would probably buy the REITs lah. I mean, that's the beauty about Singapore. I mean to say, I'm a bit pro Singapore. All right, because
okay.
I know like Singapore corporate governance is actually much better than in Malaysia.
Okay,
or if I can say that lah. Or people just tend to trust Singapore lah.
Okay, the brand name lah.
Singapore dollar or Malaysian ringgit.
Okay. Yeah, it's a good point you talk about the currency, right? Because yes, the REIT is domesticated in Sing dollar, but the REIT itself, they have property in Greater China, so Hong Kong and renminbi, and also now the Japanese yen. This is also a popular question with I think Mike is asking it also with the trade war, right? And you see Asian currency depreciating. Wouldn't that be a risk for you? Do you see that as a risk by holding so much asset that is linked to, say, the renminbi, or I don't know what will happen to the Japanese yen also?
Okay, so of course there's a risk. Actually, everything there's a risk lah. All right. You don't invest, it's still a risk.
Yep.
Right. So for me, I mean, it depends on your question lah. Like for example, I'm a Malaysian. I hold Malaysian ringgit. So is there a risk in holding Malaysian ringgit? Of course, there is, because we know that the ringgit is not as strong as the Sing dollar. So if you park your wealth mostly in Malaysian ringgit, then of course, the risk is that what if the ringgit drops? It happened a few years ago. So that's the thing. For me, I think as long as the currency is relatively stable, I mean, the stable as in whereby the performance of the currency is not like the rupiah. It just crumbles like nobody's business, right? as the thing is relatively stable. In fact, my benchmark is this. Anything that is better than the ringgit, I'm okay with it. Sorry.
Okay.
I mean, they say Malaysia is still a nice country to live. I mean, but when it comes to stock, right, like if you can trace back to what Stanley has asked previously, why do I invest? So one of the reasons is capital preservation.
Yes, okay.
So
yeah, I totally agree on that.
Why not go with a currency which is far more stable, all right?
Okay.
And to me, Hong Kong dollar, which is pegged to the US dollar, I think that one is quite okay. Renminbi will be there, and Japanese yen, no matter what, will still be there.
Yep.
I believe so lah. Of course, you ask me whether there's a risk. There's still a risk lah.
Okay.
Anything about risk lah.
Yeah, fair enough. Yeah, you just in a way you are already diversifying away your currency risk, right, by investing outside of Malaysia for you. Okay, interesting. Okay, now after you say done your homework of understanding, say, the North Asia property, and you like their growth potential, how do you know when you should be investing in the do you look at this valuation? What's your thought on that?
Of course, with the fifth person, the investment quadrant, the last quadrant is the valuation quadrant, right? So
okay.
look at that, right?
Okay.
So for me, there's a few ways, a few metrics of valuation. The first one, of course, you have to calculate the gross dividend yield. And then you compare it. I tend to compare it with the years before. So for Maple Tree, their data goes all the way back to 2014, the most meaningful one.
Okay.
So you just calculate the gross dividend yield for each year, and then see whether is it the highest or is it the lowest. If it's below average, then it should be okay. If it's above average, then you have to see whether you are willing to take it up lah. All right. But for me, I bought Maple Tree. Let's see. My own data. Okay, so at the time when I actually purchased the REIT, all right. So my purchase price was 1.11. Okay. So the DPU was 7.5 cents.
Okay.
All right. Well, my gross dividend yield should be around 6.78%.
Which is quite similar to now as well, right?
Quite similar to now lah. So you buy now, you should be getting more or less what I'm getting lah. Okay.
Okay.
And if I compare with the previous years, let's see, where's my data? Okay, the lowest is 6.31.
Okay.
The highest is 7.29. That was like way back in 2014.
Okay.
So I thought it is actually closer to the average. All right? Although it's actually below the average by a bit, but 6.78%, I say, okay lah, I think I can grab it lah.
Okay. Yeah, but because it's income stock, so what you're saying is you basically look at their dividend, their yield band, right? The average yield throughout the years, what it has been, and if it's a reasonable price, you don't have to buy it exactly at the cheapest point, but as long as it's reasonable, you are fine with investing in it, right?
Correct. So that's one of the metrics lah. Another metrics, of course, another tip is that the NAV, right, the net asset value, must increase over time.
Okay.
So
and it has been the case for Maple Tree. Yeah. Okay.
NAV has increased for the North Asia Trust, and with that, I will also compare it with its price. So it's PB ratio, or I call it price to net asset value. All right. So you compare that, and at the buying, when I buy the REIT that time, the price to NAV is about 0.84.
Okay.
So it's like 16% below the book value lah. So I thought, okay lah, just grab some lah. If it drops, maybe can grab more lah. But So that's the reasoning lah.
Okay.
Mm.
I see.
That's a few ways of calculating few valuation metrics of
Mm-hmm.
how I actually assess a
Mm-hmm.
REIT lah.
Mm-hmm. Okay. Yeah, it go back to one of the question previously asked on our question form. Dennis asked, do you use things like margin of safety when looking at the REIT? Because Warren Buffett or Benjamin Frank Graham always talk about margin of safety, but if we include that, almost all the REIT we cannot buy. How do you see margin of safety in this case?
Actually, it depends on the plan. All right,
Mm-hmm.
different people will have different styles. Like for example, Benjamin Graham he's actually well known for buying anything that is below the book value.
Mm-hmm. Mm-hmm.
All right, so that is his way of thinking. All
Mm-hmm.
right, maybe he's not so much into cash flow. He's more like, okay, the business is about $1 million if half a million deal.
Mm-hmm.
All right, so that is his primary focus, but that's not my primary focus.
Right.
For Warren Buffett, I think Americans are a little bit different because the tax structure over there is actually a bit different.
Mm-hmm.
So they tend to actually go with something. They will go with something that is quite good, fundamentally good, but it may not necessarily pay very good dividend yields.
Yep.
All right?
Mm-hmm.
Because of the tax structure. It's nothing wrong with the business.
Mm-hmm.
The business, still Warren Buffett actually invests in a lot of very strong cash flow, cash producing kind of businesses. It's just that the cash is actually being stored inside the bank account or they are being redeployed for other investments.
Right.
So that is the key to capital gains.
Mm-hmm.
And so that's why they don't really use, so that's why they have another metrics of going about it. But for me, it's actually more about building a secondary source of income from my own stock portfolio.
Mm-hmm.
So therefore, my emphasis on the margin of safety is a bit lesser in that sense. All right, unless you want to say, okay, if you want to look at Mapletree North Asia, like I say, the price to NAV is actually 0.84. You can interpret that as I'm buying the properties owned by the REIT at 16% below its book value.
Yep.
All right. So is that a good safety or margin? Then it's debatable to me. Yes, because I already bought it. If you haven't bought it, then maybe it's a no.
Okay. I think Karina asked a good question also. You talk about the interest rate risk and how you mitigate it by investing in REITs that is having more fixed interest rate. But
Yes.
but Mapletree itself, the Mapletree North Asia, they have a gearing close to almost 40%. In Singapore, the soft limit is roughly about 45% now, right? So is it a concern for you at such a leverage?
Let's see. Okay, I'm looking at the latest slide. So it says as at 30th of 2018, the gearing ratio is actually 38.8.
38.8. Okay. So not 40%. Yeah, sorry. Okay. Very, very accurate. Okay.
38.8. Okay. And to me, it's not really a concern.
Okay.
Because number one, they just bought property. All right. It's not like they have bought property like 10 years ago. They just bought it like a few months ago. So I think here's the thing, all right. If you have a REIT that is not really into growing their assets, they just keep whatever they have. In general, their gearing ratio should be lower because they're not buying anything.
Yep. Okay.
But if it's this Mapletree North Asia Trust, they have actually bought 6 properties. So technically speaking, they should actually have a little bit higher gearing. If they don't borrow, how are they going to finance the purchase of the property?
Okay.
Of course, there is price issue and stuff like that. But I think for North Asia's case, I think it's quite reasonable because actually, if they buy Japan properties, I look here, the Japanese loan, the interest rate is actually lower, possibly lower than Singapore. So
yep, definitely.
So why not, right?
Okay. Interesting. Yeah. So if the REIT is able to give you a higher growth potential, you don't mind it having a slightly higher leverage ratio, lah. Right. I really want to move next to Fraser Logistic and Industrial Trust because I find it quite interesting as well. But before that, I think. Lam is asking us. I think one question is, I think maybe on the mind of many of our audience is, for income purposes, right? Yes, you invest in REITs. It's a good income, but what's the difference between buying that and maybe just buying a index fund like a ETF, either a REITs ETF or even just a Straits Times Index ETF? Those also give you, I guess, 3-4% dividend yield. How do you see that difference?
Okay, so the difference between ETF
and REITs.
Oh, okay. So for me, I always ask this question, all right? How does an investment give me cash flow? So that is a very, very to me is a question, all right? It's something that I will probe further. So for REITs, right, it's very simple. The logic is the REITs own a portfolio of properties, all right, and these properties are tangible, and they have tenants paying rental income to these property owners, right? And of course, why do we buy REITs? Because we don't really have $3 billion to actually buy them up. So thankfully, thankfully through REITs, they actually broken it down to like pieces of units so that they can at least piggyback at least we own a little bit of that property. So that's REIT. But for ETF, I think ETF is designed more as a price tracking mechanism.
Okay. What do you mean by that?
Price tracking mechanism is like, for example, in Malaysia we have the KLCI ETF.
Okay.
So it is designed to actually trace the performance of the KL stock market.
Yes. Okay.
Okay. So basically, it has a weightage of stocks. All right. Not too sure how they calculate it. There must be an algorithm or something like that. I have no idea. All right. But there's a weightage.
Yep.
Like how many goes to Maybank, how many goes to Public Bank, Petronas, and DG, Maxis, and stuff like that.
Yep.
And then they build a portfolio and then they just invest accordingly.
Yep.
So it's very hard for me to compare the difference between an ETF and REIT. But if I may say lah, you're hardworking, you invest in REIT lah. Hardworking, you don't want to do so much research, then you just bang on one ETF lah. That's I think that could sum it up lah.
Okay, I guess you're saying that in a sense, if you want to just track the market, which the market has been doing quite well in recent years also, and it's quite decent return. If you just want to track the market, ETF is definitely a good way. But why you are buying particular REIT in terms is, I get a sense that you feel that this REIT can outperform the ETF. Would you say so?
Yes and no lah. I mean, I like to get down into the specific stock. I'm the kind of like, everything I buy, I want to know in the final details lah.
Okay, you just enjoy the process more lah.
I just enjoy, like for example, you want to buy Harta Lega, then I want to know how many factories they own.
Okay.
So that is called the active kind of, or the more hardworking type of investor lah. You want to know things one lah. All right.
Okay. Sure.
But if you are the not so, I don't want to know so much lah. Okay. I just want to just straight away in one purchase, in one transaction, I want to own like 30 companies.
Yes, buy the whole market.
Then buy ETF.
Okay, understand. Cool. Okay, let's move on to Fraser Logistic and Industrial Trust. For those of you who might not be familiar with this trust, it is sponsored by Fraser Centrepoint Properties, which is also quite a large property company in Singapore. And the main bulk of their industrial and logistic property is now in Australia. And so, what about this REIT? Why do you like it?
Okay, so this one is because number one, I like the sponsor, Fraser.
Yep.
All right. So, but not every single Fraser's REIT I like. All right.
Okay.
All right. So
which one you don't like?
I think the commercial one, maybe I'm not into the commercial Fraser's commercial trust.
Okay.
In fact, the yield is actually higher, but not so much into some of their properties. Centrepoint Trust, that one is I think that one is a good REIT.
The malls,
North Point,
and Causeway Point.
Causeway Point, yeah. Brilliant assets.
Yep.
All right. And because when I go to Singapore, I always drop by North Point lah, so I get to see the developments lah. Hey, North Point got a lot of good things to eat, you know.
Yeah.
Fantastic, man. The way they renovate, the way they renovated the place, it's amazing. All right, so
yeah, our Singapore friends, if you have any recommendation in North Point to eat, let me know now below. I'll go try it out.
All right.
Yeah, going back to the logistic.
Okay, so now going back to the logistics, I like it because actually for industrial REITs, right, in Singapore, because land is scarce, so therefore there is a limit when it comes to the land lease. All right, all industrial properties, or maybe all properties, most of the industrial properties in Singapore, if I'm correct, is leasehold, not freehold.
Yeah.
And Fraser's Logistic Trust is in Australia, so it's freehold. Most of it. Most of the properties owned by Fraser's Logistic Trust is freehold.
Yep.
So that's one advantage over Singapore. The another advantage is the land lease period. The leasehold period is actually 30 years in Singapore. But if freehold is freehold lah, it's like forever lah, all right? Or as good as forever lah, all right? That's another thing. And one more thing that I like about FLT is this. Like in Singapore, land is scarce. So if you want to actually if you want an industrial REIT to actually quickly expand within Singapore, it's quite hard to do so.
Yep.
But in Australia, particularly to Fraser's Logistic, because they have rights of first refusal, ROFR, to properties, all right? That's why the sponsor is very important, all right? So you can actually, they can actually buy, they are given the first rights to actually buy logistics and industrial properties developed by Fraser's Properties Australia, FPA.
Right, okay.
And FPA is a very interesting company, all right? So to me, I envision FPA as a machine that develops properties. Okay, and it is actually one of the biggest, if I'm not mistaken, one of the biggest property development companies in Australia.
Yep, it
all
is.
Right?
Yeah,
it is lah. All right. So, as long as it continues to generate properties like this, then of course, FLT, which is the Fraser's Logistics Trust, will have a healthy pipeline of properties for them to choose to actually grow in the future.
Cool.
All right.
So again, going back to the potential growth of this REIT.
Sorry?
Again, going back to the potential growth of the REIT, right? So it's quite important for you.
It's very important because you want growing dividends, right? So that one is very important. Okay, but I bought it like months ago lah. I mean, quite a long time ago. Not to say long time. I mean like 5-6 months or earlier this year lah. Until I thought that is an Australia focused kind of REIT. Until maybe a few months back, where it actually changes its investment mandate. And then when I bought the REIT that time, it has around 60 properties in Australia. Now it has 80 plus properties because they changed the investment mandate, and then they buy another 20 properties, industrial properties.
What do they change to?
They actually now include Europe as their in their investment mandate.
Okay.
So that means I think they bought a lot of properties in Germany and as well as in the Netherlands.
Okay.
20 of them.
Okay.
So you get a chance to. So of course you looks good lah when BMW or Volkswagen become your tenant lah. Become the tenant of your properties lah. Then you know, okay, these tenants are like prime and the quality type of properties. You also like feel good about it lah.
I see. Okay. As when you're talking about logistic industrial properties, right? I think this is a question by Augustine or so. Of course, the largest logistic REITs in Singapore is Ascendas REITs. And Ascendas REITs previously is very focused in Singapore industrial, but they also bought a huge chunk in Australia now, and now with the recent acquisition in the UK as well. Do you compare the two when you are buying it? Do you have a view on Ascendas? Why do you choose this over Ascendas?
Can I be very honest?
Yeah, go ahead.
The you lah.
Okay. So in a way, you don't see any quality difference between the two lah, right?
Yes and no. I mean, Ascendas REIT, right? Okay, so it all goes back to how much you can afford and stuff like that. Of course, FLT at $1 plus. And Ascendas REIT is about 250, 260, 270.
Okay.
So to a Malaysian, you can own a lot more FLT units than Ascendas lah.
Okay.
All right. So therefore, that actually influenced part of the decision.
Okay.
And second thing is, of course, the yield. The yield is actually a consideration. All right. So FLT is actually paying a lot more, 6-7% over 5-6% by Ascendas.
Right.
So that is actually a main decision maker lah for me. But in terms of quality, if those of you who are actually listening out there and you say, hey, I got some Ascendas REIT, actually to me it's a good REIT. To me it's a good REIT. At a good price, will I consider to buy? Will people consider to buy? I believe so. All right.
Okay. Yeah.
It's just a matter of preference.
Okay.
No.
Cool. Yeah. The 7% yield definitely attracted you. Okay. I think our time is almost up, but before you go, right? I think I really want to dig your mind, and maybe you can give some advice to our audience, especially if someone is just starting out investing in REIT. What will you recommend the first step? How do they go about investing in REIT? And what's the one, maybe some of the good REITs that they can even consider?
Okay. There are about 40 plus REITs listed in Malaysia and Singapore. Okay, so the first thing to do is to actually you can actually start reading their annual reports lah. All right. So you don't need if you are listening from Malaysia, you just check out IGB REITs. Not asking you to buy. The reason why I say this REIT is because it only has 2 properties.
Right.
B&B and the Gardens. Yeah, and it has a lot of details about these 2 companies. A lot of details about these 2 properties. All right, and the financial report is actually very easy to read. So what I'm suggesting is that you download the annual reports and then you just read them. All right, to build up your skill. All right, not necessarily asking you to buy. All right. Then once you got that done, then you move on to something which is far more complicated lah. That is the REITs which has more properties. Then you take it on from there. Of course, if you are coming from Singapore, then you can start off with SPH REIT lah. To me, it's a very boring REIT, but then it has not much properties to start off lah. So it's just the Clementi Mall and I forgot the other one, Paragon, I think. So just read the two, and you will get some insights lah. All right. So that's the first thing. The next thing is you may want to check out Value Invest Asia's what do you call the REIT session, the REIT articles. I believe they have tons of it, right? I do not know lah. Maybe
yes, no, we have updated it, and I have to of course thank you. A lot of it is written by you.
So read them lah, because they are very good. They are very handy materials lah. All right, where a lot of effort, a lot of thought process, a lot of brain have been actually burned just to actually come up with all these articles. So read them lah. These are actually very good, good materials.
Yeah, definitely. Just go to Value Invest Asia and you go to our REIT section. I think almost all the REIT, we will have a report on them. So it's a good way for you to get started on them. Yeah. So thank you so much for your time, Ian. Before you go, right? Of course, another shout out to our sponsor FSM1, which is one of the lowest cost brokerage now in Singapore. You can just go down to fsm1.com and check out their pricing. And a lot of times when we are investing, the security and the safety of our money is very important, right? But when you're investing with FSM1, all our money is kept with a custodian bank, a local bank in Singapore. So it is quite safe, and they really offers one of the best platform I have ever used as a broker. And I'll give you the last word. Ian. Before you go, why don't you tell us a little bit about your this? Oops, sorry, Michael. Okay, why don't you tell us a little bit about your website, bursaking.com.my, and what's it about?
Okay, so bursaking.com.my is a platform where I built it, and it's actually meant to be a communicative platform. So these days, what we do a lot is that I'm actually in touch with my fellow subscribers. All right, so whereby they will actually throw me all kinds of questions about stock investing, and I'm the back-end guy who actually supports them with all kinds of materials. All right, for example, we have stock data, we have case studies. All right, we have all kinds of tools like intrinsic value calculator and stuff like that. All these tools are actually provided to these subscribers to actually enhance their skills and their knowledge when it comes to stock investing. All right. Of course, some of them are free. Some of them is actually based on some of the services are actually available on the paid membership.
Okay.
All right.
Okay.
No membership fee. So this is actually bursaking.com.my. So if you want to know more about REITs and stuff like that, I don't mind. You can actually just drop me an email, or you can just go to bursaking.com.my to subscribe the free newsletters and stuff like that. Okay. And you'll be given the fresh case studies on a weekly basis.
Cool.
Twice a week, I believe.
Cool. Yeah, definitely check that out especially if you are interested in investing in the Bursa Malaysia market. Do check out bursaking.com.my. So thank you very much, Ian, for your time. I hope we can speak to you again. All right. Cheers.
Bye-bye.
Bye-bye.